Buy the dip strategy. This is a highly requested trading strategy video. The last time I made a video lesson on this strategy, many of you guys actually followed step by step and picked up the setup for your own trading. In this video today, I want to teach you a set of refined criteria for this particular buy the dip strategy that works best in the current market environment. This strategy has allowed me to make almost $5,000 on Nvidia and another $5,000 on Microsoft. That's a combined $10,000 in profits in a span of just a couple of days with this one strategy. And I'll be teaching you exactly how to do so in this video. So, are you ready to trade better in the new year? Make sure to smash the like button and get ready to pay attention to the strategy lesson. If you've seen my video lessons before, then you know that a good strategy must have a set of straightforward criteria and a repeatable pattern for you to time your entries and exits. In this video, you're about to learn how to identify the correct chart pattern for this strategy, 4 simple criteria to buy the dip, the technical analysis and psychology behind this setup, and last but not least, I'm gonna show you a live trading demo of how to execute this buy the dip strategy. The best part is that you can apply this setup to any stocks above 500 million market cap. So even though you see me trading a $400 stock in this example, this is still very applicable to much cheaper stocks like SoFi or even Palantir. If you enjoy these kind of step-by-step video lessons, then make sure to drop a like down below. Alright, to properly trade this buy the dip strategy, I always follow 4 important criteria. Number 1 is a stock uptrending on the daily chart with multiple levels of support areas. That starts by going over the technical chart pattern that you must be able to identify to enter a trade. So on the charts over here, you're looking at Nvidia. I know this is a more expensive stock, but once again, this is applicable to any stocks over 500 million, whether it's $5 or $10. So you can see on the daily chart, this stock has been on a tear. Pretty much since the $400 held on the daily support here, the stock has climbed up $100 per share to testing that $500 area. So you can see this stock has been setting higher highs day after day and higher lows. So you can see once it broke through that recent resistance around here, 473s, the stock tested 500, had some small pullbacks here and there, but you can see this range on the daily. Every time it dipped to around this area, 480s, 490s over here, you can see these like small little daily wicks candles. The stock has been getting bought back up. So you can see there's a lot of support around this 493s area and down here 490s. And then over here, you can see these areas around 484s as well. And below that, you have more support down here at 478, then later on 473s. So this is what I mean by you have multiple levels of support. After the stock has started consolidating, you can see a lot of highs, dip back down to lows, bounce back off again. This is the multiple levels of support that you want to see if you're picking a stock to buy the dip. And it's not just this month, the stock has done that around the same levels. You can see all the way back in August, over here, the stock has tested very similar levels before, and each time it's bounced off. Over here, broke above it, bounced off that same levels, retested the highs, and came back down. So this is the kind of charts you want to see in order for you to pick the stock to dip buy. You don't want to see the kind of stock that just goes straight up and straight down. So a good example of a stock you want to avoid to buy the dip is something like this. You can see a lot of straight up and down the next day, straight up, no consolidation on the daily at all, and you just go straight back down to where you came from. So this is not the kind of chart I would buy the dip on for this particular strategy. So a deadly mistake a lot of traders make when buying the dip is that they are trying to catch the falling knife. Again, the key difference is that you're trying to buy the dip on an uptrending chart on a daily time frame, and you're buying at very established intraday support. Before you continue on to the next criterion for this buy the dip strategy, let me really quickly tell you about a free tool I highly recommend. I've been making these strategy video lessons for a long time now. A very common question I get is how to start trading and follow along my strategies and find these ideal stocks to trade if you're not ready to spend on expensive platforms. My answer to that is you can now start with a very beginner-friendly platform that's free with live market data using Webull. The main reason why I recommend Webull is that it offers free real-time quotes for equities trading. Unlike investing, active trading requires a smooth charting platform on desktop, and you'll need real-time market data, customizable scanners, and technical analysis tools. And guess what? They're coming soon to Canada next month. Okay, let me guide you through step by step how I set up a trading platform on Webull. First, you can create a free account with Webull and download the Webull PC platform or mobile. There's no minimum deposit requirement, you can deposit any amount to get started. Now that you've accessed real-time stock charts, you should set out a screener to look for gappers to trade. You can copy my scanner criteria right here to find stocks with high volume and highest percentage gappers. Next, you can set out a daily chart and intraday chart on your main screen. I personally prefer to customize my charts to show volume bars and only the VWAP indicator. These are essential technical indicators to help you read intraday price action. Webull is perfect for brand new traders who want to get started, whether that's live or paper trading. You can also access cash management to earn 5% annual return just by having a cash balance. Webull is offering you free fractional shares if you deposit any amount of money. Each share could value up to $3,000. You can sign up for free today with my link down below. Thank you Webull for sponsoring this portion of the video. So now looking at the intraday chart on Nvidia, you can see there's a lot of support around that 493s, 490s area. This day particularly that we traded it, 493, sold off, bounced, had a nice bounce. You can see once again that same support area is tested here the previous day and the last couple of days before. So just make sure that whichever support area, whether it's 490 or 493 that you are using to trade this particular strategy, it's been tested intraday in the past couple of days before. Moving on to criteria number 2 for this buy the dip strategy. Is the stock forming consolidation or reversal patterns near the key support area that you identified? Remember earlier I mentioned that you're not trying to catch the falling knife. You need to wait for consolidation or confirmation. Now what does that look like? There are a couple of different ways to identify potential reversal. A very simple one is you are waiting for the first green 5-minute candle to form after multiple red selling off candles. So in this example, I also took this trade on this day. You can see the stock sold off from 497 previous pre-market highs area to that daily support at 493. So you can see consecutive red candles selling into the open, and once that first green candle forms, that's when you actually have the bounce. And you can see the exact same example the next day. The stock spiked to 505's pre-market levels, then you sold off to that same 493 support area. Multiple red candles selling off, then you have the first green candle to finally form around that daily support, 493's key level area, then you got a $5 per share bounce. A couple other ways to look for reversals can be higher lows and higher highs on the 2-minute or 5-minute chart, or some people even use 10 minutes, that's fine too. Or another way is to see whether the stock really quickly bounced off that support area, and that would be price action. And don't worry if you feel a little bit lost right now, because I'm going to be showing you step by step later in the live trading example for this buy the dip strategy. Alright, we're back to criterion number 3. Is the market stabilizing or uptrending instead of selling off all day? I think this is such a simple concept to follow as a trader, regardless of what kind of long strategy you trade. If you are generally long biased, you should concentrate most of your buying power or trades on days where the market is uptrending or consolidating, green on the day. And at the same time, that means avoid going long when the market is just selling off all day. You can see the market sentiment really simply by going to the market tab over here on Weibo. You can see markets tab, and you can see a heat map of the overall market condition across different industries. You can also see globally how the market's doing over here as well, and as well as how many gappers are holding up on the day, the percentage change, as well as how many stocks are making new highs. A lot of times, these are the strongest stocks in the market. Just by doing this very simple thing will increase your win rate drastically if you're long biased. Criteria number 4 for this particular strategy. This should be a given, but you don't want to see negative news that's causing the stock to sell off. It's fine if the stock has no news or positive news, but you don't want a very negative catalyst that's pushing the stock down heavily. And luckily for us, on today's dip buying strategy examples, the stock had very neutral to decent news. But obviously it would be even better if the stock had very positive catalyst. So now that you learned the 4 very important criteria for this buy the dip strategy, the next step is trade planning. As a trader, you should understand the technicals and the psychology behind a strategy. Only then you can manage your entries and exits with proper risk management. So we did talk about earlier that the daily support area we're looking at is around this 493's zone. You can see that daily support, a lot of little wicks on the daily. The stock is getting bought back up around that key level. So looking at the intraday chart, you can see the stock spiked and later on sold off to that support area. So for me, what I'm looking for is, okay, stock is selling off. Where is the previous low day? If I looked at the previous day, which I also did bought this particular stock at the exact same price area, you can see 493's bounced off nicely. And then the previous day, you actually rallied to like $500. So on this particular day, if I bounce this here, I want to see if I can get, around that, at least VWAP area, that's a nice price target, or even 500s if we get there. So we're talking about potentially, $3, $4, $5 per share upside. But at the same time, when we plan our risk for this kind of entry, you want to make sure you are risking at least $1, $1.50 for a stock like Nvidia, because it's considered a high beta, large cap stock, meaning it's very, very volatile. So, and if we look at the previous day, you can see the exact same level, 492, 493's area that's been tested the day before. So when I long this area, I need to be okay with risking yesterday's lower day of around 492s, so about $1 per share. And if my price target is the pre-market highs, 496, that means I'm risking $1 per share to make $3 or even more. You can see it went all the way to like 498. But you're risking at least $1 to make $3 and potentially higher. And these kind of price targets is the beauty of this particular strategy. You can often get really outsized reward that's more than 1 to 2, 1 to 3, or even more, because your entry is waiting for the stocks to sell off to the support area. Remember, you're not buying the stocks breakout at the high of the day. In this example, if you're buying the breakout all the way up here, that's at 497s, your risk to the downside is a lot greater. And sometimes you have very limited upside, like this one. The one caveat of this strategy is that you have to be very patient and wait for your entries to buy the dip. You can see later on in the 2 live trading examples, there was one that I definitely got in way too early. And that made me sell my position for a profit way too soon and missing out on almost $5 per share upside. If you've been following along on this strategy lesson, please remember to drop a like down below and feel free to ask any questions you may have in the comment section. Okay, so now that you've learned the criteria for the strategy, including the entries, exits, and the stop loss area, let me show you my live trading executions using this dip buying strategy. Okay, to start, you can see I already traded a lot of different tickers for about an hour. You can see the realized and unrealized down here. But I want to bring your attention to NVIDIA. On the chart down below here, I currently have 0 position in NVIDIA, even though I traded a long and a short side. You can see I had that 492s area drawn out on the intraday charts. That's going to be the key level I'm using. So note I'm using 5-minute chart on the top and 15 minutes at the bottom. You can see I just got in 1,000 shares of NVIDIA at 493.20s. Back at the 5-minute chart, NVIDIA. I'm waiting for the stock to bounce. This is definitely an example where I'm kind of more anticipating my entry instead of waiting for confirmation. But you're going to see later on, I'm going to add, after the stock has started to form the 5-minute candle for confirmation. You can see that 493 is holding up nicely on NVIDIA. Yes, you did like sell off a little bit to like 492.50s, but that's like what, 50 cents unrealized. So you want to give it room to breathe, at least $1 to $1.50. You can see after a couple minutes, NVIDIA is finally starting to show a bounce all the way down here, the first 5-minute candle that I was looking for. You can see I'm looking to buy 500 shares more of NVIDIA, 493.60s, 493.70s. So I added how much? 510 shares, 493 average. Now that gave me an average of, you can see down here, 493.40s, 1,500 shares. Again, we're buying the bounce, right? I think earlier I mentioned that with this, I'm looking for a bounce as close to VWAP area as I can get to, or potentially higher. So you can see VWAP right now is 499. But if I can get to that previous high intraday, that 498, that's still like $5 per share. That's pretty good. So you can see the first 5-minute candle closed green down here. Again, that's a very simple and technical way to buy the dip with confirmation. You can see, fast forward a little bit, I sold, just 500 shares locking in at 495s, 300 shares at 495s, that's what I meant. 1,200 shares, 493.40s average. Stock is now back all the way close to 496. And this is like what? Just a span of less than 10 minutes. You can see 2 5-minute candles have formed. So this is a very, very quick trade. That's a really good thing about trading these high beta stocks because the bounces are huge. As long as you're comfortable risking $1 to $1.50. Fast forward, I definitely sold this one too soon. 495s, I sold another like 200 shares. So I'm keeping just the 900 shares left on NVIDIA. I have a good average at this point. I'm not gonna risk $1 per share at this point. With the remainder shares, right? I sold 600 shares. With the remainder 910 shares, I'm gonna set my stops, break even on those. You can see on the 2-minute chart, you're holding up very nicely, higher highs, higher lows. Same on the 5-minute chart. So at this point, the trade is risk-free. It's either, I realized $1,000 on NVIDIA and have this unrealized go back to 0, or it actually bounces to 497, 498 for me to lock in an even bigger profit. So I'm really trying to let this winner ride out longer. So you can see I'm trying to sell a little bit at 497 if we get there. I like to put an order out. Sold a little bit, probably a little bit too soon. You can see I sold 300 shares at 496, close to 497. Definitely could have held longer. So I sold pretty much all of it, besides that 300 shares at 497. So you can see lock in $2,900 on NVIDIA by the dip strategy. And I'm keeping the unrealized $1,000 with 300 shares. So I actually didn't keep recording, but I did hold on to NVIDIA all the way to about, you can see over here, 498, as close to that as I could, 497s. But regardless, that's like, a $4 per share on the final sale. And all of that is risking $1 per share on Nvidia around the 492s area. So I just want to show you one more example of the same Nvidia dip buy strategy. This is actually the day before. So you can see I got in the 1,000 shares at around 492.99, just call it 493s area. That's also lined up with previous day's close. This little dotted line area, that's the prior day's close. So that's multiple supports lining up together. So since this is like an opening trade, it's almost like a scalp. I treat almost all my trades within the first 20 minutes of the open as scalps. Just because of so much volatility, usually when I trade these, I don't add to it. You can see I have 1,000 shares with one entry and that's it. And I'm just looking for a bounce. Ideally, I was looking for that pre-market highs area, which is what, 495s, 497s. Those two will be good price targets to aim for. You can see stocks wicking back a little bit. But again, if it breaks down lower day, I'm out, risking that $1 per share, taking that $1,000 loss. You can see we're already bouncing, so that bounce happened way too quickly. 494s, nice little bounce. You can see the opening is very volatile, which is why I treat all my opening trades as like little scalps. I rarely add to my opening trades. I only start adding after about 10 o'clock. But yeah, you can see this one, 495s. If I get it, I'm going to sell into that. So I'm up about $1 per share on Nvidia. On the 2-minute charts, also holding up nicely and reclaiming VWAP, as you can see. Fast forward a couple minutes later, you can see we're testing at 495s. I sold 300 shares into 495s, realizing $600. Now let's see if we get a higher day, which is like 496, 497s. That'll be great. But I have a feeling I didn't have the patience to hold that long. Being that it's still like within the opening time, I know how volatile things can be. So I always prefer to sell into that opening breakout. You can see I sold into 495s, locking in $1,300. I still have unrealized 850. I don't think I get to sell that. Maybe I did. Okay, I'm selling all of it at 497.99. You can see it did look like it was forming like a long wick around here, and a lot of times these like wicks, that means it's a false breakout. So that's why I want to lock it in. So I'm all out. You can see lock in $2,000, within the first 20 minutes of the open at 495s. And by the way, back to the intraday chart. Even though I didn't keep on recording, you can see on this chart, I basically got out all the way here, 495s. I got out here, but the stock later on continued rallying past the pre-market highs, 497s, go to 499, then eventually at the end of the day went all the way to 505s. Obviously, I left a lot of money on the table. As you can see, this very simple buy the dip strategy can be very profitable and repeatable day after day if you can truly master it and learn the 4 criteria we talked about earlier. In just the last 2 weeks, I've traded this particular setup many, many times on expensive stocks to very cheap stocks. If you learned a lot from this video, make sure to drop a like and leave me any questions you may have down below. I'll do my best to answer them. Don't forget to check out Webull down below. They have a lot of cool features that I personally use myself, such as the scanners, charting, and a lot of free data as well. It's very useful, especially if you're trying to get started. Available for US, Canada, and many international countries. If you want to learn more of my trading strategies, feel free to check out the strategy playlist over here.